Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter with Old Capital. And joining me today, as always, Mike Becker.
Hey, Paul.
Mike Becker also with Old Capital. Boy, we took the summer off, Mike. But now we're back. You know, we have all the kids are now back in school as of probably a day or two ago. So we're excited to get kind of back into the swing of things. And we're excited to have Cathy Finn and also Ryan Heddleston with Catalyst Multifamily Management with us today. And they're going to talk a little bit about property management. It's one of the things that can kind of make you or break you as an apartment owner. And we're going to talk a little bit with them and have them give us some insights about what's going on, what property management is all about, what the expectations are for not only the property manager, what you can expect, and what they can expect out of you. So let's set the table correctly. So, Mike, I'm going to kind of turn it over to you a little bit. And let's kind of introduce Cathy and Ryan.
Yeah, Cathy, Ryan, why don't you start telling us a little bit about yourself and kind of your background and why you got into multifamily?
Well, I will let Cathy go first. Ladies first, please.
So I've been in the business almost 14 years now. And prior to that, I was at an investment banking firm and had a really strong interest in multifamily real estate and investing. So I decided to dive into the deep end pretty quickly and been in it 14 years now and have learned a lot from being green to being pretty seasoned and lots of great stories and experiences to talk about.
We'd love to hear some of these stories too, but how many units do you guys manage at this time?
A little under 3,000.
Wow. That's a lot of units to keep in contact with, to keep all the managers and the regional managers and the apartment ownership groups and keeping everybody abreast. And Ryan, tell me a little bit about what do you do?
I actually work more on the brokerage arm and the business development arm. Been doing investment real estate for about 10 years. Started, like a lot of your listeners, on the single family side in Pittsburgh, Pennsylvania. Got to about 50 single-family and small multifamily duplexes, fourplexes in Pittsburgh and here in Dallas. Realized that there were bigger and better things and wanted an opportunity to get into the commercial side and be able to scale up. Got with Michael Phillips and Cathy Finn. And yeah, here we are now, about 5 years since we partnered up and own a little bit over 1,000 units, manage just under 3,000. Broker a number of deals, both on the buyer side and on the list side.
Well, good. So tell me a little bit about what makes a successful multifamily management company in your opinion. Like, what are the key components to doing this business right?
Excellent question.
Yeah, thank you.
Due diligence on the front end and always expecting the unexpected and being prepared for that, preparing yourself for the worst and hoping for the best and everything in between, and having all of your ducks in a row and being very thorough and putting the right people in place to help the execution process on site.
So let's start maybe with the beginning then. So tell me a little bit about due diligence. What are some of the major factors that you need to do when you're looking to acquire a property? Or if I'm an owner and I want to hire a management company, what are the things I should have them help me with on the front end before we ever buy the thing?
Budgets, of course, laying out a proper budget for the property, doing a proper inspection in the due diligence phase, looking for deferred maintenance issues. Plumbing is always a very exciting aspect of this business, and sometimes you don't know what you're getting yourself into until you dig in a little bit, so to speak. And really just being able to have a thorough understanding of the big ticket items, and plumbing being one of them.
Yeah, the capital expenditure budgets and having them be appropriate on the front end and having Old Capital helping their clients get the appropriate financing to do those things all on the front end so you're not taking them out of cash flow. That's just an integral part of having these deals done well. You know, if you don't have the money to do the larger items or if you're coming up short to handle a lot of the deferred maintenance that you find in that due diligence, if you're doing it down the line, you don't account for it at the very beginning and you're not able to, to finance those things, you're taking you're
And
taking
knowing-
it out of cash flow and not able to really perform as you should be.
And knowing where you're going.
Yeah, your disposition strategy, or if you're having a capital event, if you're refinancing.
And what your threshold is, your tolerance for occupancy dip, and how aggressive you're willing to go to really transition the property and change the property and position it for disposition.
So transitioning with that point, so most of the properties you guys do have a value add component to it. So what are some of the things that owners of properties that are doing a value add play should expect that they don't typically expect? So what are some of the surprises along the way? So we bought a property that needs some TLC. We have a capital budget plan. What do we expect next? Kind of talk through the transition, the dip, et cetera.
So our technique is pretty aggressive, and typically we go in and very quickly identify people that really don't need to live there for many reasons. It could be they are not screened properly. They could have criminal issues. There could be drug issues going on. To really eradicate that quickly. And that usually happens within the first 60 days, maybe 90 days, depending on the aggression level. And during that phase, you are looking at an occupancy dip. I have taken a property all the way down to 50%. A lot of people can't tolerate that, depending on how difficult the property is. Most properties, you're looking at 75 to be extremely aggressive in that threshold. Once you clean the property out of the demographic that no longer needs to be there, then the execution of the marketing steps in, the proper staff is in place, the proper infrastructure is executed to actually run the property. And a heavy market survey at that point is extremely necessary on a weekly basis due to where you are in the marketplace right now to price your rents.
And a lot of these deals that we're taking over, the value add plays, we're billing back water, sewer, gas, pest and trash. I mean, things that previous management, previous ownership weren't doing. And we're raising rents. So naturally, with 100 or 200 or more increase in the total housing cost per month for the residents, a lot of them just do choose to move. But, we found that the going in aggressively, setting the proper expectation for ownership on the front end and saying, within the first couple months, you are going to have that decline in occupancy. But in the grand scheme of owning the property, the strategy to either refinance or, sell in 12, 24 months, it's ripping the Band-Aid. The sooner you can do that, the sooner you can get the total income as high as possible, the better off you be, even though the short term is a little painful.
All right, let's kind of talk about just some basics. Property management company. If you don't have a property management company, you who are the owner become the property manager. At what period of time does make sense to bring in a property management company? Is it 10 units, 50 units, 100 units? I know that you guys specialize in properties greater than 100 doors, but you also will look at maybe some smaller portfolios too. Again, this is a broad question, and for just the property management industry. Cathy, with your opinion, is it 25 doors? Is it 30 doors? At what period of time does it make sense to really bring in a property manager?
I think at 50 doors and above.
So a professional property manager comes in, and with 50 doors or below, you're going to pay X amount of fee. At, say, 100 doors and above, you're going to pay X amount of a fee. So the 50 doors and below, that fee could be, just shooting from the hip, 50 doors and below, 8, 9, 10%?
It could be that high.
Yeah.
It definitely could be that high. I would say anywhere between 6 to 10%.
Okay. And so what a lot of people don't realize is all the things that you do to earn that 10%, because that is a tough demographic when you start to talk about these smaller properties. I mean, they're very difficult to manage. You have to have somebody almost on site on a daily basis, someone that's going to be showing the properties, somebody's supervising the maintenance person. You're going to have a lot of things that they have to stay in front of, not only the books themselves that have to be done and the checks that have to be written, but there's a lot of things. And now the economies of scale come in when you talk about 100 units and say above. Where do you see as an industry a property management fee? Give me kind of a range at 100 units and above.
At 100 units, you're still going to be in the 5 range to 6, depending on
5
the
to
property.
6 to 7% would be kind of just a gross number to do that. So I think those two numbers are 5, 6, 7, and maybe 9, 10, 11, 12 for property management. I think those are fair numbers. And so most of these properties that we take a look at already have the property management fee embedded into the operating expenses. So it's not something that is a shock to anybody who's buying a property. That number is already in there. So let's talk a little bit about reporting, and then also too, how do people interview or find you? So first thing is reporting. What kind of reports do you guys provide to your investors?
That's a great question. So monthly, we do put a report package together that gets sent out to the investors, and it includes the income statement along with all the accounting, back-end office items, bank reconciliations, and a summary of the property, any significant items that took place during that period, anything that we need to be able to communicate with the ownership groups will go out in that report. So it's a very professional, put together outline of the
And then
performance.
also too, I've seen some of your reports, which are just absolutely fantastic. It kind of also tells you how you get your business. How do people come to the property? Through word of mouth? Is it through advertising that the property pays for? Is it just drop-in business? Is it internet business? And I would probably imagine that all things work. Where do you have the greatest input for people coming to the properties?
So it's really across the board with many different, we're very fortunate these days with the internet. So we have Craigslist that we primarily advertise on daily. That's a very cost-effective route of marketing. So maybe somebody that's smaller trying to get into the business, that would be a great route for them to go. We do everything from Zillow to a lot of other marketing campaigns. We really focus on grassroots marketing when we're trying to change the demographics of a property. And that's typically one of the best ways to do that.
How tough is it to change a property from X to Y?
Well, that's the $1 million question, isn't it?
Yeah, I'm sure you guys get asked that all the time when you're buying, when someone's buying a value-added property. I mean, how long is it going to take? I know there's multiple answers on that. I mean, there's really no pat answer.
What does it take to turn a property around from one that's underperforming, that's distressed, to something that is worth a whole lot more and performing better? So what are the things that need to be done in your opinion?
Yeah, I would just say the consistency in which we manage all of our properties. The fact that we are so stringent on our screening, the fact that we are stringent on our collections. We have consistency month to month, property to property on those things. Rent is due on the 1st, it's late on the 4th. And if people don't come and pay in full, we don't collect partial payments on any of our properties. We file for eviction on the 8th.
And those are the things that a lot of people make mistakes on early on in the industry. And I got a lot of conversation pieces going on regarding our policies and procedures because we are very stringent and there is no gray area. And we really have learned the technique of making a market with a property. And so everything that goes into being able to lead your on-site team to that victory and having them believe in the process throughout the entire fruition of the game, so to speak. And that's probably one of the most challenging pieces that are in this equation because you have to have your team believe in the goal and where you're going and then how you're going to get there and leading them through that. And it's a very intense process.
How many people on a 100-unit property should there be that are going to be managed? Is it the manager and a maintenance person on a 100-unit property? I mean, how many on a 200? What's kind of the rule of thumb of what you...
On a stabilized property at 100 units, you could do a manager and one maintenance guy. When you're coming in and you're taking it down to 70%, you're going to need additional support in the front office and the maintenance department. So you would need additional support in the maintenance department for about 3 to 4 months while you're turning all the units, and you would need additional help after the units were turned to lease up the property for that 3-month period.
What's your underwriting rule of thumb when you're looking at staffing for a property? Like, is it one for every one inside employee, one outside for every 100 units? What's kind of the rule of thumb you guys use?
I mean, that is roughly the rule of thumb in the industry as a whole. But there's a lot of other components that go into that. And, when you're going in and you can't expect one guy to turn 30 apartments in 60 days.
Yeah, got it. So kind of taking a step back from one of the themes Paul was just talking about. So you guys only do 100 units and up. Why is that? Maybe describe the efficiencies or the lack thereof in the smaller properties. What got you to the 100 unit mark?
Probably the most challenging thing that us as a management company and our investors on the smaller properties is really just staffing. So to find competent managers and maintenance staff, the smaller the property, the less that you're able to pay them. You just don't have the same economies of scale there. So, there's other reasons, but that's really by far the largest one, is the ability to pay a decent wage for competent staff.
And staffing is always challenging in this industry as a whole. And, if you have a larger office where if you have a manager and a leasing agent and somebody's sick that day, there's still somebody covering the office, as opposed to a one-person office that gets sick that day, and you've really got to pull from other resources to cover the office.
I really think that's the reason why you want a management company, because if you're the manager, you're the person who's running the show. If you get sick, there's nobody to cover for you on that. And then if you do need additional staff, is that the management company can pull other people from other properties that you can have them help on your property during the period of time that maybe somebody is sick or on vacation. That really is one of the benefits. We talk about on some of these properties they're evaluated or even stabilized, amenities. What type of amenities do you think right now, since you guys are at where the rubber meets the road with the tenants, what are the typical amenities that tenants are looking for? And what do you think gets the biggest increase of rents?
Flooring,
Flooring?
and then appliances.
Is there a color of appliances?
Black.
That's the preferred color is
Correct.
A black appliance? Yeah. And how about a pool or a workout facility or a dog park?
Those things are nice, but that's not the main draw.
It's the interior of the unit itself.
It's the interior of the units.
The 2 or 3 tone paint on the walls, maybe the crown molding, maybe the new cabinets, new countertops.
Yes, we will also put new baseboard trim down, and once you put new floor down, that really takes it up a level. And we've had a lot of great success with that. Even if we haven't replaced appliances, but we've put in new flooring, that's really a huge decision maker.
Yeah, and a lot of our properties too were built in the 60s, 70s, and 80s, and replacing the appliances that were with the property when it was built, as well as the different fixtures, lighting fixtures, plumbing fixtures, coming in, replacing fans, doing our typical upgrade is a brushed nickel. For the cost of it, it gives the units a much more of an upgraded look.
The biggest bang for the buck.
Absolutely.
We've known each other for about 5 years now. So what? Obviously, the environment is completely different today than it was 4 or 5 years ago. So what's kind of changed over the last 4 or 5 years? So if someone's kind of new to the business, what's kind of changed, and what's the basic environment that we're in right now, in your opinion, for the C-class apartment complexes in Texas?
Yeah, the fundamentals have been getting better year over year. Rental demand. The rent growth that we've experienced even on the B and C level has been significant. Obviously, that's come with increase in pricing. So a deal that you traded for $30,000 a door just 2 years ago is trading for $40, $45, $50 now. So that's been a humongous shift in the workforce housing or just multifamily in general.
But you're able to get those higher rents. It'd be something if valuations just went up $30,000, $40,000, $50,000 without having higher rents. But you're getting the higher rents, aren't you?
Sure, absolutely. And that the rental market combined with the capital market and the type of financing that you guys are able to provide to your clients makes these deals work.
In addition to us making the market. So when we go into an area, I don't want to be the cheapest person in town. And I try not to be the cheapest person in town for that reason. And that's really how you make the market. But it takes a lot more of a sales technique when you're sitting in front of somebody, showing them your floor plans and touring them through your property.
Yeah, and that's another reason, going back to it, that I mentioned earlier, is it is so important that on the front end you have the right capital expenditure budget. You're spending the money where you need to. You're willing to put the money both into cleaning up deferred maintenance, improving the amenities on the outside, and most importantly, upgrading the units themselves.
And taking the bad element of the community out of there.
Yeah.
You guys help with an acquisition. We try to throw in on an acquisition the rehab dollars.
For sure.
And then we want to try to get those rehab dollars implemented as quickly as possible. So kind of put Humpty Dumpty back together again. But we know during that period of time that the rehab is going on. It's going to be challenging for cash flow. So we try to put as long of interest only into the loan as possible during the period of time that you're being challenged to rehab it and then re-tenant the building. So, we're blessed that we live here in Texas. And a lot of the people that listen to this podcast maybe are not from Texas. How difficult is it to get a tenant who doesn't pay to vacate the unit in Texas?
Well, it's really not that difficult at all. Texas is one of the states that is pretty pro landlord, and it's a process, and there's laws in place. And when we help somebody move it along, they're usually out within 30 days through an eviction process.
So it really is don't pay, don't stay.
Don't pay, don't stay.
Yeah. So a lot of the people listen to podcasts a little bit newer in the industry are aspiring to own their first building. What are some of the things that you guys seen, or maybe you had to come in and clean up for inexperienced owners? Like, what are besides the capital plans and things like that? We all talked about that. What are some of the unknown things? City issues, things like that. What are a couple of the gotchas that are pretty that you see repeated?
When you just hit the nail on the head, and going back to our conversation earlier about some of the things that maybe people that are not in the industry might not understand, everything from city issues to even dealing with fair housing lawsuits. And we deal with this every day in and day out. There's constantly a fair housing issue that lands on my desk, and we're professionals. We handle this every day. We know how to handle these situations, and at many times when you're taking over a property, could be pending outstanding issues like this that are going on. And if you're not in the industry and you don't understand how to handle these types of situations, you could get yourself in a pinch, and it could be a liability for you.
So talk a little bit maybe more about city issues. Like, what are some of the unknown city issues some of these people walk into? What do the cities do? So I own a single-family house. What's the difference between owning a single-family rental versus an apartment complex when it comes to dealing with the city?
Well, we're very much on the radar, 100 units, 200 units, whatnot, as opposed to a single-family house. So there's a lot more attention that the city and their code enforcement staff put on the properties in which we manage.
Annual inspections that will encompass everything from fire extinguishers to inside the unit. And it's quite encompassing, and it can be very cumbersome at times to get through those issues.
Yeah, and that's really one of the, beyond just the fact of what do you want to do to the property to capitalize on rents as much as you can, we like to get in there, know what the issues are with our owners ahead of time so we can account for that. Are we doing GFCIs? Are we putting those into the units? Do we need to cure other deferred maintenance that we fairly certain that the city is going to ping us on in the first year or two?
It could be something as little as painting the building.
Sure.
And they change their city codes every year.
Yeah, definitely much more on the radar screen than when it's owning a little single-family house. So maybe you guys can think of a funny story or two. What's one of the more G-rated wild stories you could think of on recently dealing with a tenant or
I might have to let Ryan handle a G-rated story. The G-rated stories usually end up in his office.
Yeah, I don't know how many G-rated stories there are to tell.
Maybe a PG-13 one then. So
well, you have quite a few that will come up to the office from time to time.
Yeah, a lot of people get discouraged at the fact that we are aggressive, that we are raising their rents. Our duty, while we provide safe housing, is to our owners, and those owners, our ownership groups, are depending on us to raise those rents. And a lot of people that have lived there for 10 or 15 years, who have had the same rents for quite a long time, are a little dismayed, to say the least, that we're raising their rent. So I had a gentleman come into my office the other day and kind of barrage me with not so kind words on the fact that our management company was raising his rents and he didn't understand why. So that's kind of the commonplace objections that we get.
That's kind of a benefit of having a management company, is that if you're the owner, you don't want to take those those visits, the knocks on the door from, hey, listen, I live in unit 202 and I'd like to talk to the manager. If you are the owner and now / the manager, you're taking those visits, and sometimes that can't be good.
And
So-
sometimes you run into little scary situations where, you'll do a unit inspection on a building and notices will go out, and you're in there with the keys and you're opening up the door, and all of a sudden, out of nowhere, a pit bull shows up. So those are some of the stories that you can run into, and you didn't know there was an animal. There was no animal on the lease, and you have to be very cautious.
Sure.
What other crazy things have you found when you opened the door? Marijuana, guns.
All the above.
People pass away in their units, and you find them a couple days into it. So that's obviously not pleasant.
And these are some of the things that people don't want to talk about, but the reality of the situation is this is the reality that you're dealing with.
Absolutely.
In C-class.
And the reason why I bring that up is because you guys earn your fee, every damn dollar of that management fee. Because realistically, I don't want to manage a property. I don't want to see the tenants. I mean, really, I guess I could, but I don't really want to employ a third-party property management fee that's a professional, that treats the clients and the tenants with respect, try to provide, like Ryan was saying, a safe environment. Want to be able to market the property correctly in the community. Want to have a good relationship with all the community leaders, the people that are in all forms of government, whether it's the police department that comes on to your property, that you have to make sure that you're not taking in any crazy tenants or they have felonies or warrants against them. I mean, you guys earn your money hands down without a question. I think you guys do a great job. What are you guys thinking about doing? Is it more units? Are you guys looking for additional business, or are you happy really at 3,000 doors?
Before I answer that question, I just want to say thank you, and especially since we do manage 7 of Michael's properties, we do earn our fee very well.
As high as it is.
Yeah. So thank you for that softball, Paul. But no, we're actively growing the business. We have a great foundation, both on our technology and our corporate and our on-site staffs. So we're looking to here at the rest of 2015 and beyond grow pretty substantially.
So if someone does want to reach out to you guys, what's the best contact, and how do they get out to you if they want to talk to you about potentially managing a property, or really help them buy a property, or whatever you guys do?
Sure. So on the management side, go to catalystmultifamily.com, CATALYST multifamily.com, and then on the brokerage and investment side, it's mbpcapital.com.
Good. Well, Cathy, Ryan, appreciate your time. Thank you for coming in.
Thanks,
Thank
guys.
you. Appreciate it.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.